On this video, we're going to talk about trading terminology and what you're looking at when you're looking at the charts. Now, this is a super basic few-minute overview because we have our full-blown academy that you're going to go through later so that you can master this information, but this will at least get you started. This chart that we're using is specifically from Sniper Pro. If you didn't know, it's one of our AI softwares that'll scan the market for you to find high probability trades for you to help you get in the right trades at the right time. So I'll talk a little bit about Sniper Pro at the same time. So when you're looking at the charts, the first thing is what asset are you looking at? What asset are you trading? Some people specialize in crypto or regular currencies or indices. My favorite asset to trade is gold. Now, each currency or asset has its own personality. It moves at certain times. It moves a certain amount of points. It respects certain patterns. So less is more. You don't have to trade everything. You can master one or two or a few things and be extremely profitable doing that. Now, next is these are called candlesticks. Okay, you could see as these red candles are going down, that's the price of gold going down. As these blue candles are going up, that's the price of gold going up. You could see the current price right now, 4079. You could see the last few minutes, price went down. So you're looking at price and time. I say price because you could see the current price right now, but also time because we're on the 1 minute time frame, and each one of these candles represents 1 minute that the price went down or 1 minute that the price went up. Now, you could zoom out to the bigger time frames to get a sense of the overall direction. You could zoom into the smaller time frames like the 1 minute when it comes to precision for entries. Now, I like sticking to the 1 minute for people who are newer within their first few days or weeks or even months, just because there's a lot more movement happening on the charts. So how does it work? Well, basically, the way that trading works is that your job is to predict the direction of the market. Thankfully, we have Sniper Pro that helps us actually do that. So let me give you an example. This is a scorecard on Sniper Pro, and it said, hey, there's 3 big reasons, patterns, to actually enter for a buy right now. So let's say that we took this trade on Sniper Pro and we got in for a buy. Well, from here to the price over here, the market moved 171 points. Now, it says 17.1, but on gold you move the decimal over 1. So 171, they're called pips, but for everybody on this training, we're going to just call them points to keep it super simple. So 171 points. Well, how much would you have made in terms of dollars? Well, the smallest trade size possible is 10 cents per point, so that would have been 170 points times 10 cents per point. You would have made $17. Now, let's say average trade size is $1 per point. Then you would have made $170 on that exact same trade. Let's say that you were doing $10 per point because you had more capital and a little bit more experience. Okay, you would have made $1,700 in that same exact trade. And so the amount of money you make depends on 2 factors. How many points did the market move in your direction? They're called pips. And then your lot size, which is your trade size. Did you do 10 cents per point, $1 per point, $10 per point? You could do anywhere in between. It just depends on how much capital and experience that you have. But once I understood that the same skill to make $10 in a trade in a few minutes is the same skill to make 1,000, all I had to do was just get more experience and grow my capital. That was pretty mind-blowing. Now, technical analysis is a fancy word for patterns. There's certain patterns that happen on the chart over and over and over. And that's why we have Sniper Pro, because it'll literally do the analysis for you and tell you exactly where to get in and where to get out. So it works the same way when the markets are going up. You could also short the market and make money as the markets are dropping. So this is an example of shorting the market or hitting sell. Okay, so you have a red scorecard right here. Sniper Pro said, hey, there's 6 different patterns. There's 6 different reasons why the market might drop right here. So if we actually entered from this red zone, price went down for about 50 points. So again, that could be $5, $50, $500. Just depends on your trade size. You would have taken these prices of where to get in and where to get out on Sniper Pro and then plugged them in to MetaTrader, which is the trading platform that we use, and copied the numbers over, and that's it. So when you take a trade, you need 3 numbers, 3 prices. You need your entry, this red box, that's the first price over here. You could see the actual price. Then you need your target. In the case of shorting the market, your target is below the price. So you just focus on the first target, not the long-term one initially. And then you have your stop loss, your safety net in case the trade goes the wrong way. Now, if you're buying, then your stop loss is going to be below price and your target is going to be above price. Now, this is an old trade, so the stop loss and take profit isn't there anymore, but you would have seen those numbers, and you would have, again, all you do is copy those numbers, and then you could potentially profit. So that is some basics of how trading works. Your job is just to predict the direction, and the amount of money you make depends on how many points did the market move in your direction and your trade size. Well, how do you know where to get in and where to get out? Sniper Pro does the heavy lifting for you and literally gives you the entries and the exits, and you just copy those numbers over to MetaTrader. You're going to learn a lot more about that here in the up and coming videos.